What if a single trading session exposes the hidden forces shaping a company's stock? Forces that most retail investors never get to see. Today's breakdown reveals exactly how SoFi's price reacted to institutional moves, macroeconomic pressure, and unexpected shifts that created confusion across the market. If you've been following SoFi or planning to invest, this detailed analysis will help you understand what might really be happening behind the scenes. Hello everyone! Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell. But before that, this is not a financial advice video. SoFi's trading session delivered a mix of volatility, hesitation, and contradicting signals. The stock closed down nearly 3% after moving between a low around the mid-26 range and a high near the mid-27 level. More than 57 million shares exchanged hands, reflecting a highly active day driven largely by institutional behavior rather than retail momentum. Early in the session, the trading pattern looked fairly stable until an unusual spike appeared near the end of the day. This brief, sharp upward move was later confirmed to be the result of nearly 1 million shorted shares being returned, a move that immediately raised questions. Why would short sellers suddenly unwind part of their position near the close, especially on a day when SoFi showed overall weakness? While there is no direct explanation, the timing of the return signals that larger players may be positioning ahead of major macro announcements. Before digging deeper into SoFi-specific developments, the macroeconomic backdrop needs to be addressed. The market entered the day already tense because of upcoming Federal Reserve decisions. Several key labor reports released earlier provided mixed indications. Weekly ADP numbers showed a significant drop from previous readings, pointing toward cooling employment conditions. The JOLTS job openings report for both September and October landed within expectations, neither strongly positive nor negative. This puts investors in an awkward position. The market generally prefers weaker data right now because it increases the likelihood of interest rate cuts. Current pricing suggests that traders expect a 25 basis point cut, with the probability hovering around 87%. However, this level of confidence can sometimes lead to premature assumptions. Federal Reserve Chairman Jerome Powell tends to avoid ambiguous decisions. He usually reacts strictly based on the data in front of him. That means if the recent numbers do not overwhelmingly justify a cut, he may choose to hold rates steady, regardless of market expectations. If Powell does not cut, the market may respond negatively in the short term, especially stocks like SoFi that benefit from lower borrowing costs and improved consumer sentiment. On the other hand, if a cut occurs but Powell signals uncertainty about future cuts, volatility could still spike. Now, shifting back to SoFi as a company, one of the few notable developments came early in the morning when a joint announcement was released involving SoFi and Templum. They revealed access to exclusive private market opportunities in major companies such as Epic Games and Stripe. While this reflects the continued expansion of SoFi's private investment offerings, it's not the kind of news that typically moves large blocks of institutional money. This partnership had already been made public in 2024, so today's update acts more like a reinforcement of an existing initiative rather than a game-changing announcement. Another point generating curiosity involved government-related traffic data linked to SoFi. A significant increase in outgoing traffic from a government URL raised speculation online. Some investors believe it could be tied to potential changes in student loan policies, especially since reports surfaced that certain officials might consider the possibility of selling student loan debt to private investors. Others believe the uptick might simply reflect new authentication systems or back-end updates. As of now, nothing is confirmed, and any meaningful clarity will likely only be available during SoFi's next earnings cycle early next year. Now, let's examine the short interest landscape. By the end of the session, a total of 974,000 returned shorted shares were recorded. Earlier in the day, shorts were actually adding to their position before reversing course. In total, short sellers returned around 1.1 million shares. The broader short interest sits at just over 10% of the free float, representing nearly 117 million shares. Movements like today's can indicate short-term repositioning rather than long-term conviction. Options activity paints a more divided picture. Roughly $44 million in call options traded versus $11 million in puts. Despite the heavy call volume, more than half of the total option flow leaned bearish. Bulls are targeting a move into the 28.50 to 29 range, while bears believe the stock could drop into the 25 to 26 zone. Clearly, sentiment is split heading into the Federal Reserve meeting. Institutional movements on the secondary market added more complexity. Several large block transactions over $1 million were recorded, and most of these were sells rather than buys. One transaction exceeded $84 million, while others fell within the $7 to $9 million range. Such selling pressure suggests large investors were reducing exposure, possibly to hedge against tomorrow's uncertainty, rather than due to concerns specific to SoFi's business model. On the dark pool side, the activity was elevated, which aligns with short seller positioning. Dark pool transactions often provide insight into institutional strategies, and today's patterns indicate that shorts were highly active, even if some eventually reduced exposure near the close. From a technical standpoint, SoFi currently trades within a support zone around 26.71. If this level breaks, the next major support sits near 25, followed by 26.01 as an intermediate level. Resistance remains around 27.20, which SoFi struggled to test during the session. Tomorrow's macro announcement could easily push the stock toward either the 50-day or 100-day moving average. Whichever level breaks first may set the direction for the remainder of the month. Momentum indicators show neutrality. The stochastic RSI is neither overbought nor oversold, meaning SoFi's price can swing sharply in either direction depending on Powell's statement. Algorithmic activity was visible today, but no new analyst ratings were issued. Most analysts have been on standby awaiting macro clarity rather than adjusting SoFi-specific projections. In summary, the session was shaped more by anticipation than by direct SoFi developments. Institutional selling, unusual short covering, mixed option signals, and macro tension combined to create a day filled with noise rather than clear direction. The next 24 hours are critical. Whether the Federal Reserve cuts rates, holds steady, or signals future intentions will likely determine the stock's next major move. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.